On this episode of What's Going On with Shipping, it's time for this week's episode of What the Ship, the top 5 maritime stories. I'm your host, Sal Mercogliano. Welcome to this episode. So, a lot going on behind the scenes in global shipping that's going to affect you, the consumer, on a daily basis. The narrative right now across the mainstream media and everyone you're hearing is we're getting back to normal, that shipping rates are coming down, and therefore everything is returning back to the way it was. But there's some underlying issues that are still there that have the potential to come back up and disrupt, as we've seen repeatedly over the past 3 years here, the global shipping market. All right, before we do that, take a moment, subscribe to the channel, hit the bell, so you'll be alerted about new videos as they come out. All right, let's jump into story number 1. So story number 1 is based on this story from Lodestar that showed up on G-Captain. Fast and Furious, return to normal puts liner profits at risk. So this is kind of that narrative I was talking about here that we're seeing. A new research paper from HSBC predicts that the Fast and Furious collapse in freight rate will result in global container shipping returning to normal earlier than previously expected. This is the theme. This is what we keep hearing over and over again. And one of the things they're highlighting here is the decline in freight rates. The Shanghai Containerized Freight Index, the SCFI, which tracks head haul spot rates from China, has fallen by 51% since July, representing an average 7.5% weekly decline, which, if it continues, would crash the index back to pre-pandemic levels. It goes on here. The paper says there is a significant downside risk for 2023 and 2024 for liner profits. Therefore, the bank has slashed its profit estimates up to 51%, as well as cutting dividend expectations. And this issue here that they're highlighting, I think, is extremely important. They're talking about the fact that they don't expect profits to be as big as they were in the past. And that's not surprising. Let's be clear about this. Profits have been at a level never before seen in terms of global ocean container shipping. And so this shift is going to be a really important one. So let's take a look at some of these details and see whether or not this story kind of holds up. So here's the Freightos index here with their global index being shown here. And you can see the massive rise in freight rates here that took place pre-COVID. You see the COVID rate there was bouncing right around between $1,200 and $1,500. And then when COVID hit, we saw the initial spike and then that absolutely massive spike last year at roughly around this time, where the global index, and this is a global index, this is not the regional index, was hitting around 10,000, and now we're on the backward slide here, and it is coming down. The other thing that's really interesting is this chart put out by Flexport on the status of U.S. ports. So one of the themes last year at this time was the massive backlog at the port of LA and Long Beach that jammed everything up. Well, if you look at it right now, LA and Long Beach only has 8 ships waiting to get in. They've got an average berth time of just 2 days. Where you see the backlogs happening are in ports like Oakland because of issues with labor. But more importantly, it's on the East Coast. The East Coast is where you're seeing it at ports like Savannah, where 32 ships are waiting to get in. New York, New Jersey, where there's 8 ships, and then head over to the Gulf Coast, you're seeing 22 ships waiting to get in. But the underlier, the one that's really, I think, important to note here, are the rail delays. Renegotiation of the Class 1 rail agreements, all of this means that there may be issues going forward, and this can cause problems in the ports if they cannot get the cargo out in a timely manner. What's really interesting is when you look at the cycle of stories that have just come out recently, all of them are painting a little bit of a different picture than that main narrative we had at the beginning. This story, the IMF, the International Monetary Fund, lowers outlook for global economy. So we're seeing a slowdown. We knew the slowdown was coming. There was no doubt about that coming off this. So that jives with what we've seen so far. This one from Mike Schuller over at G-Captain, U.S. import volumes head south in September, but are still above pre-pandemic levels. I think this is a point Mike hits. I think it's really, really important. If you graph out and you look at the number of containers that are coming into the United States, and this graph came from a Freightways story by Greg Miller, you'll see right here that, for 2022, we were actually importing more containers than in all previous years up until we hit about August. And then we kind of did this huge drop. This is the drop off the cliff that everybody's talking about. But I also think there's a lot of factors at play here. Number one, we're still above 2019. We haven't dropped below 2019 numbers. The other issue here is at this time last year, we had a hard time offloading container ships. They were jacked up off the coast of LA and Long Beach, 100 of them. Couldn't get them in, and a lot of goods that were supposed to go for the holiday season wound up getting landed late and not getting into the stores at all. And so there's a lot of inventory, holiday inventory, that's been sitting over from last year. I remember a story last year about artificial Christmas trees and how expensive they were because you couldn't get one. But that's because they couldn't get delivered. And I'll bet you this year we're going to see a bit of a difference here when it comes in. Maybe we'll use that as our index here to figure it out. Other stories right here. Shipping lines still raking in billions despite sinking cargo demand. So even with the demand for cargo going down, container liners are doing great. And what do I mean? Costco third quarter profits are up 6.4% year on year. OOCL revenues per TEU up 21.1%. This story right here by Lodestar. OOCL kicks off another turbocharged earnings season for container shipping. All those graphs I've showed you with the rates of containers dropping, those are largely spot rates. But many shipping companies locked in shippers to long-term rates when the rates were through the roof last year. And so now they're still getting those premium rates today at a much higher volume than they're getting with spot rates, which means that they were smart. They booked these cargoes long in advance, and now they're reaping the benefits of this. And so we're still seeing the profits roll in. Maersk story. Maersk rides shipping roller coaster year. Yeah, they're going to sit here and say, well, things are going to slow down. Woe is me, poor Maersk. But they're making record profits. At the same time, we're seeing the container lines start increasing the number of cancellations they're doing. So we're seeing the number of blank sailings coming back up to 2019 levels. In 2020, 2021, you could not blank a sail. I mean, everything was sailing. Everything that could float was moving containers. Now you're not sailing as many vessels because you're trying to get those freight rates back up. And then the other story here that I think is really interesting to put in the context is this: the volumes in some of these ports. South Carolina ports set record volume in September. And then this story, Mike Schuller again over at GCAP, and Port of Savannah sees signs of market correction. They're talking here about the decline. They had a little bit of a lower month than they thought, but they also had to evacuate out because of Hurricane Ian. That caused some problems for them. But overall, it's a great month for Savannah. When you look at where they've been, you definitely see them way up over where they've been in the past. And let's not forget, they got 30 ships waiting off the coast right now. And you come down to this story right here, and you really get to kind of the heart of it. The Port of Savannah expects to clear the need for vessels to wait at anchor by the end of November. Currently, approximately 204,600 containers are on the water heading for Savannah, down from a high of 262,500 vessels in July. Just to put this into context, the average size vessel calling at Savannah is probably between 8 and 12,000 TEU. So again, when you start looking at that, so if you just average 10,000 TEU for a ship right there, you're talking about 26 ships back in July, and you're sitting there about 20 ships right now. That averages out to exactly what we see. So obviously there is a lot going on here regarding container. Is things coming back to pre-COVID levels? Yes. I mean, I obviously tonnage is coming down. But again, that's because we're recalibrating the economy. What does the economy look like post-COVID? And again, people are working at home. Some are going back into the office. That changes people's buying habits and buying patterns. This is all being reflected in containers. And let's not forget, it takes 60 to 180 days to get your goods to your front doorstep. Just because you hit that button on Amazon doesn't mean that good started moving a day or two, after that. The minute you hit the button and it shows up your house a day or two later. It's been moving for 60 to 180 days. And the only reason that works is because Amazon and all these other companies have algorithms that predict on your buying pattern. And what we're seeing right now is when we get into these weird elements that throw off buying patterns, shipping has got to accommodate that. And even though we're seeing record low freight rates across the Trans Pacific, remember, most cargo now is moving not across the Trans Pacific, but the transatlantic. It's coming through the Panama Canal, through the Suez Canal, heading to the east and Gulf Coast of the United States. So definitely a lot going on here. All right, jump over to story number 2. Story number 2 takes us back to the inland waterways of the United States. So a lot of traffic has been going on my channel regarding the story we just had about the lower Mississippi River closing and the low water issues on the inland waterways. Again, massive drought taking place in the interior of the United States. This means that rivers that feed into the Mississippi are not feeding into the Mississippi. And what we have right now is issues with closures on certain portions of the river. Now, that has been reopened thanks to the Coast Guard and the Army Corps of Engineers. And what we've seen here is the movement. However, a news story came out regarding this. So the area in question was the area from basically right here, from Memphis down to about central Mississippi, right here on this little stretch. And you can see there's less traffic on this area than in others. But a news story came out on G-Captain from Bloomberg that talks about issues now on the Ohio River. So this story from Bloomberg on G-Captain: barge shipping whack-a-mole. Closures on Ohio River as Mississippi bottleneck improves. Come down here. While one bottleneck may have been eliminated on the Mississippi near Stack Island, that's the one I just showed you on marine traffic, additional pressure points are emerging along its more than 2,000 miles as the river falls into low stages. According to the National Weather Service, in Memphis, it has dropped nearly 2 feet since Saturday and is forecast to fall another 2 feet by October 25th, which could tie it for the third lowest on record. We were at the 8th lowest so far. And now the Ohio River, which provides about 60% of the lower Mississippi River water, is seeing closures at multiple locations due to groundings and dredging work. And this is obviously absolutely essential. The Ohio River provides about 184 million tons of cargo shipped along it each year. And if you cannot get that cargo out, it's going to cause a lot of problem. And this drought is happening not just here, but we're seeing it in other places around the world as this story goes on and talks about. Low water on Europe's Rhine River is having an impact. While you're having floods in Pakistan, we're also seeing low water levels on the River Plate in South America. And so this is going to cause more problems for the United States. And if you want to get some good detail on this, Rachel Premack over at FreightWaves did this great story for her weekly modes paper. Latest supply chain crisis could threaten global supply of food and energy. You should keep a close eye on barges. Really good story that kind of recaps this. And then to put this into context here, U.S. Gulf grain exports slowed by low Mississippi River. We're seeing a backup of vessels in the lower Mississippi below Baton Rouge. This is where deep water ships can come in, waiting for these barges to get down the Mississippi River so they can load and head out overseas. So obviously low water on the inland waterways of the United States, along with the Rhine, along with the River Plate, are causing problems for getting cargo out. Not unusual. We've seen this happen in the past. Where I wouldn't say that this is, out of the ordinary, but the timing and the impact and the scale of this is making it more significant, especially with issues of getting grain and food out of Russia and Ukraine this year, the halting of export of food coming out of India. All of this kind of just snowballs. And when you have all these events taking place at the same time, it becomes critical. All right, let's go ahead and jump over to story number 3. All right, story number 3 deals with labor issues and labor issues from around the world. This Bloomberg story at G-Captain: Liverpool dockers strike as Peel ports issue redundancy. So we've seen strikes in Europe this year like crazy. We saw the northern German ports have strikes. We saw Liverpool and Felixstowe have strikes in Great Britain. And now here's Liverpool once again heading back onto a strike. And obviously labor right now is in a commanding position. They're in a pretty driving seat. and they can get what they want. Let's not forget, we're still waiting for a labor agreement to come out of the West Coast between the ILWU, the International Longshore Warehouse Union, and the Pacific Maritime Association, which runs the West Coast ports. They have been out of contract since June 30th, and we've heard rumors and issues about potential strikes and slowdowns. This is causing a lot of people not wanting to ship their cargo to the West Coast. I know the labor unions will tell me, no, Sal, there'll be no strike, but shippers don't like uncertainty, and you all have uncertainty on the West Coast until you hammer out a strike. This strike right now in Liverpool, not a major port for goods coming to the U.S., but it is a transshipment point. And anytime you have a port that goes on strike, it throws off other ships coming in and out. Add to this a strike in South Africa at the port of Durban. This one is a significant one. There's a lot of traffic that comes around the Cape of Good Hope, the southern tip of South Africa, for goods coming between Europe and the Americas. And this labor strike has the potential to cause a lot of problems. We've already seen one company, Transnet, which manages South Africa's freight rail networks and ports, declare force majeure. Basically, this is a superior force. It's out of my hands. I can't control it because of the shutdown in the ports. A lot of vessels come in and around that port for services, for crew changes, for fuel, and as a transshipment point for cargo going to other ports up and down the Americas and the west coast of Africa. So obviously the strike in Durban has that implication. And as if that's not enough, the railway strike, which we thought we got out of, hasn't gotten out of. Some railroad workers are rejecting the new contracts, and that has raised issues of a fear of a new strike. So, obviously, with labor in a flux state, this creates uncertainty in the freight market. This raises issues about freight rates and adds cost in shipments, especially when you have to avoid this. In particularly, the railway strike in the United States has that potential to cause more problems. Again, go back to that the Flexport weekly update showing the port status, and one of the issues in red there was delays in getting cargo out of ports via the railheads. That is a major issue. It all has to do with the fact that the Class 1 railways have adopted this precision scheduling system, and they've cut down the crews on the rail cars, and they've increased the size of the trains. All of that causes chaos because of the infrastructure that's in place and your ability to coordinate and move freight efficiently in the United States. When you have labor strikes and labor instability, it causes problems. All right, let's head on over to story number 4. Story number 4. So I just got back from the New York Navy League's Maritime Security Conference, a great conference, had a great time. Want to thank everyone who subscribes and views to this channel. I heard so many things about the channel when I was there. People who watch the channel, people who enjoy it, some people who didn't enjoy it because I was critical of them and their companies, but many who are just interested in the channel now and have subscribed. So to everyone who's new, hello, welcome to the channel. But one of the topics that I had a chance to comment on is I chaired a panel on wind power and wind development off of the coast of New England in the United States. And I thought I saw a batch of these stories hit this week. And I figured, okay, let me focus on this because I have not talked enough about this topic, wind power and harnessing wind power from the sea, which I think is really important. This story by Mike Scholler on G Captain. Floating offshore wind pipeline see explosive growth. The global pipeline of floating offshore wind projects has more than doubled in terms of capacity in the past year, with the UK leading the charge. Goes on here, according to a report, the number of projects in the global pipeline has increased from 130 to 230 over the past year. In terms of capacity, the pipeline has expanded from 91 gigawatts to a year ago to 185 gigawatts today. I can't say gigawatt without thinking about Doc Brown in Back to the Future. 1.21 gigawatts. Sorry, my bad Doc Brown impersonation. But that's a lot of power. I mean, obviously that's going from 91 to 185 gigawatts of power. That's enough to power quite a few DeLoreans back to the future. But more importantly, this is a power source that is absolutely essential to supplement, not to replace, but to supplement our existing power infrastructure. I think that's an important element to always talk about here, is that you don't get dependent on one source of power. You have multiple sources of power. If anything from the Texas power grid from last year has taught us, is don't become overly dependent on a specific source. And what you're seeing here is really the growth of this power. Europe obviously is harnessing it quite a bit. It goes on here. Europe represents approximately 58% or 107 gigawatts of the floating capacity pipeline, which, while UK represents 18%, with 33.3 gigawatts, of which 29 gigawatts is planned in Scottish waters. Outside Europe, leasing areas off the west coast of the United States, along with project proposals off the south coast of Australia and South Korea, make up the majority of the rest of this project. This is a really interesting idea. Some of these wind farms are connected to the ocean floor and they're freestanding. Others of them are floating. They're actually free floating and anchored. And the power generated by these windmills is amazing. These are huge windmills. Just one revolution of these windmills generates enough power for a house for, I think, a month. So, I mean, you're talking about a lot of power that comes out of these windmills. Are they, again, the end-all, be-all? Does that mean we get rid of gasoline and diesel fuel and everything else? No. But you have supplements to everything. But what's interesting is a couple other stories hit on the same thing. Big Oil ready for UK's offshore wind auction. The UK will auction off areas of its seabed in a process that could once again see Big Oil take the bulk of the country's next generation of renewable power sites. The Crown Estate, which manages the seabed around England and Wales, will sell rights to areas in the Celtic Sea in a process that will launch in mid-2023. Lead to development as much as 4 gigawatts of new renewable power capacity by 2035. European oil majors have made offshore wind a key part of their plans to grow renewable power portfolios. Again, oil companies are energy companies, and they will do energy in a variety of different ways. And I think you see that here with a lot of names that many people know, BP, Shell. You lay the power lines underwater, take it ashore, and then you can power things. I think we have to think outside the box when it comes to power sources. Don't think for a minute that I'm some huge greenie and I want to get rid of things. But at least amount of, no, I can say that's not true about me at all. But I do believe we diversify. We diversify our power sources, and that creates a better all-around environment for everybody. And let me be clear, there's a lot of wind offshore. I've been offshore. Lots of wind all the time. It's a great place for windmills. They're out of sight, out of mind. It's a good place for them. All right, let's go ahead and jump to our next story. All right, our last story is usually one that catches my eye, and I always find it kind of be the most interesting and maybe the story that's running below the surface that no one's going to talk about. And these stories, the ones I found here, all relate to the cruise ship industry. Now, we've talked about cruise ship industry in this channel before many times, but I also think the cruise ship industry has been flying under the radar here quite a bit recently. And there are a lot of issues involved in cruising right now. Understand, the cruise industry made fundamental flaws when it came to COVID. They failed miserably. How CEOs who were heads of these major cruise lines are still CEOs, I don't understand, because they blew it in a major way. And I know people are going to sit there and say, Sal, you're Monday night quarterbacking this. No one could have foreseen this. The writing was on the wall for cruise ships. They should have seen what was going. They overextended themselves. They could not foresee that everything would not keep growing. And there was absolutely no reining in self-control when it came to the cruise industry. They have basically overcommitted themselves. They've overbuilt. They've got ships that are way too big, put too many people on board. They already had multiple issues with outbreaks on board vessels of norovirus and you name it. And all you needed was something like COVID to happen, and it just has torpedoed the cruise ship industry to the point where we can start envisioning some major shakeups and shutdowns of some significant subsidiaries of the big cruise lines. This story is the one that caught my eye. Trial begins in class action suit over Ruby Princess outbreak on maritime executive. So, if you don't remember, Ruby Princess was one of the first ships to experience COVID. It's where we saw a massive outbreak initially on. Let's go back to a period of time when we didn't have vaccinations. Nobody knew what was involved when it came to COVID. 2,600 passengers on board. They dock in Sydney, Australia. They just came from East Asia, from China, and a few other places. And 660 would eventually test positive on this ship. Now what you're seeing is a class action suit being brought against Princess and its parent company, Carnival, the Carnival Corporation. And this is going to be really interesting because, again, we saw this happen not just on board Ruby Princess, but other ships, the Grand Princess, the Diamond Princess, all of them had outbreaks. And Princess Cruise Lines was really the focal point at the beginning of this. Matter of fact, their CEO resigned at the time. A lot of issues went on here. And this case going on in Australia has the potential for to make or break a company, I would argue. I think there could be a lot of fallouts, a lot of other kind of dominoes fall if this case goes against the cruise lines for not enacting better protections for its passengers on board, which is what they're arguing, basically. The other stories here were really interesting ones that also deal with the cruise line. Disney. And this is a story that I've talked about in the past. Genting Cruise Lines, which went out of business, and I got a couple of videos here that talk about that, went out of business, and it was investing in brand new ships. I mean, they were building these brand new ships in Germany. And the cruise line went out, and then the shipyard went out of business because they couldn't finish the ships. And you had brand new cruise ships sitting in the shipyard in Germany that were going to be scrapped. I mean, brand new. But now this story that Disney's in negotiation to buy Genting's cruise ship, which is a really interesting story because Disney is a small cruise line. I know it seems big, but it's not. They've operated initially 2 ships, and then they went to 4 ships, and now they're going to 6. But this gives them an opportunity to buy some brand new ships and bring them over to their cruise line. And Disney really came out of the COVID much better than a lot of other cruise lines. They did not try to get cruises going. They waited some time. A lot better strategy for Disney than some of the other major cruise lines. So there's issues, obviously, with these cruise ships. These ships were designed for the Asian market. They really weren't designed for European market. They do have some appeal for Disney, which is more family-oriented. So they're designed to hold larger families. There were connected cabins on it. So there's a lot. Meyer Werft, which was the shipyard that built this, went out of business because it was the shipyard owned by Genting. And so there's issues associated with that. I think Disney is in a good position to pick these ships up at a bargain price right now. One of the things we saw happen with the cruise lines is they scrapped a lot of tonnage that had been around for a long time. Carnival got rid of their celebrity class from the 90s. A lot of companies ditched a lot of tonnage real quick because they had a lot of new ships coming online. And we're still seeing the cruise line slowly ratcheting up. They are not back at full capacity like they thought they would be. So 5 stories across the maritime spectrum, a lot going on. Obviously, the issue of containers and inflation and recession is the dominant one sitting there. What's going to happen right now? I think we're definitely adjusting. Obviously, we're coming back to some sort of normality. The question is, what does that normality look like? And I still think we're shipping a ton of cargo more than people think we're doing. Things may have slowed down. Yeah, we're not at the all-time Mount Everest levels we were at, but we're still moving a buttload of cargo around right now. I have to say, I just looked at the numbers for the Port of Savannah, and in the first 2/3 of the year, they've moved as much containers in the first 2/3 of the year as they moved 5 years ago. And so, obviously, Savannah is booming as a port. Yeah, are they slowing down? Yeah, they're going to slow down. Everybody's going to slow down. But the question is, what does it look like once everything stabilizes and we get back to a normal freight rate? I think that's really important. The drought going on in the interior of the U.S. and around the world is a big thing too. It's affecting our ability to move goods up and down our inland waterways. That's absolutely essential because we don't have the road and rail capacity to supplement the Mississippi and the Ohio rivers. You just don't. I mean, barges are barges. They're huge. I hope you enjoyed today's video. If you did, take a moment, subscribe to the channel, hit the bell so you'll be alerted about new videos as they come out. Leave a comment, give it a thumbs up, share it across social media. And if you can, support the page. How can I do that, Sal? Very easily. You can hit that super thanks button below, in which you can give directly to the page, or at the end of the video, hit on the Patreon link, or go down the show notes and hit Patreon, and you become a patron of the page, either monthly or yearly provider. Every little bit helps. I appreciate it. And again, I want to thank all my fans and subscribers for the support they've given me over this past year and a half. That's how I got the invite to go to the New York Navy League's Maritime Security Conference, and got an invite to head down to Florida to go give a talk down there for their Department of Commerce. Actually invited me to come down and give a talk to business owners down in Florida about ocean shipping. A lot of invites coming into what's going on with shipping, and all of that is due to you, the subscriber, and I want to thank you for that. Until the next video, this is Sal, signing off.